Hey guys, welcome back. So in this video, we'll be answering the question, is Ethereum a security? We'll be looking at the timeline of Ethereum and some of the key events that the SEC could argue that Ethereum behaves like a security. So you'll be understanding some of these key arguments, and you'll also gain better insight into whether you want to maybe take some risk off the table and sell Ethereum if you think it's a security, or if you don't think it's a security, then maybe you can sell it and buy it back in if the SEC sues them, or you can just hold throughout. So yeah, watch this video if you want to know whether to buy or sell Ethereum. And also this video will be split into two parts. So in this video, I will be answering the question, is Ethereum a security? And then in the next part, part two of this video, we'll be answering, if Ethereum was sued by the SEC, what would happen? Before I begin, I want to give a quick shout out to two of these commenters here, Mark73 First One and Joe Black ZX6R, for giving me this content idea. If any of you have content ideas or suggestions on how to make this channel better, just let me know in the comments below. I do this out of my free time. I don't earn that much money from this. So, I'm just some guy that enjoys making this content and, sharing it with you all. So yeah, if you have any ideas, just let me know. Drop it in the comments below. I read all comments. So yeah, with that, let's jump right in. So first off, the regulations around what is a security and not a security is not really clear. And there's a long history of different exchanges, blockchains being sued by the SEC. And one example is, this case here by the NYAG brought against KuCoin, and basically the NYAG is claiming that Ethereum is a security. But in the past, there's been sort of key people in the SEC saying that Ethereum is not a security. So, my point here is that it's not really clear what is a security and not a security. So let's just first understand what is a security. A security is just a record which shows you own a part of something larger, and you expect to generate some profits from it. You can also trade it on an exchange depending on the value. So these are just some examples of securities. There's, stocks, bonds. And how the SEC decides what a security is they use this thing called the Howey Test, which has 4 criteria. And all 4 criteria must be met at the same time for something to be considered a security. So let's just briefly just go through it here. So the first thing is it's an investment of money. It doesn't have to be cash. It can be any asset that is basically traded in exchange for that security. There's some expectation of profits. So if you're, the profit doesn't come from your own work. It comes from the effort of other people. So when you invest the money, you're expecting some profit back from that person you invested with. Third thing is it's a common enterprise. So this is more about the pooling of money of different investors. And that is all tied to someone else generating profits. And then the fourth thing here is just it makes it explicit that the profit comes from the efforts of someone else other than you as an investor. And let's just go through a quick example here. You guys know I like to give examples on my channel. So a security can be virtually anything. So for example, let's say you give money to an apple farm, and the apple farmer gives you this special golden apple. That special golden apple could be considered a security if it meets all the criteria of the Howey test. So for example, let's say you expect the farmer to upgrade their farm, and the notoriety of that farm will grow, and people know that, oh, you have this special golden apple. I want to get that special golden apple because everybody knows it's special, and everybody knows that farm. And at the time of when you purchase that special golden apple, you're expecting that to happen. You're expecting profits to come from this special golden apple later in time, and you're relying on that farmer, and you're expecting to trade it at a later point in time. So that could be considered a security. But why do I care if Ethereum is a security or not, or if any crypto is a security or not? There's the stock market. I can go into the stock market. I can freely trade stocks. Does it even matter that some crypto is a security? Wouldn't it be the same? Like, wouldn't I still be able to trade it on Coinbase and stuff? What difference would it even make? Like, why would I even care that it's a security? Well, technically, yes, it doesn't really make a difference, but actually, it really does. So yeah, I guess it does make a big difference. So if something is classed as a security, then there's a lot of different regulations that restrict the use and ownership of that security. So for example, in different countries, they have their own securities regulations. There's restrictions on who can actually hold it. Like in the US, like certain types of securities can only be traded by accredited investors. So people who have more than $1 million or something like that. So it really restricts the use of that token if it was deemed a security. And just registering as a security is a complex and long process. It goes through many different points, and there's stuff that needs to be checked, and it goes through a whole thing, and it just slows down the distribution and adoption of this whole ecosystem that we're in, right? So this has serious implications on basically the use of cryptocurrencies. It would make it would seriously stifle the whole innovation of this space. And for example, here, if you're on Uniswap here, as an example, I like to give examples again. As an example, if you wanted to trade Ethereum on Uniswap, then the creators of Uniswap would have to comply with securities laws. And let's say that the SEC says that only accredited investors can hold and own Ethereum. That means you would have to be KYC AML checked by Uniswap to say that, yes, this person is a accredited investor. And then if you are an accredited investor, if you have whatever the requirements are, I think it's like $1 million or something like that. If you have that, then and only then you're able to trade Ethereum on Uniswap. So you see here, that really limits the growth and innovation of the space. Okay, so now we've gone through some of like background setting. We kind of know what security is. We know why we're interested in whether Ethereum is a security or not. Let's answer the question, is Ethereum a security? So that was just a video of Vitalik here describing the fundraising model of Ethereum back in the day. This was the Ethereum ICO. You can obviously find this video on YouTube. But if you watch this video actually, and if you go through all the surrounding documents of the ICO, this Ethereum offering here, this ICO, it could be actually considered a security. Now I'll go through the reasons why. So obviously the first things first, the first criteria is that it's an investment of money. These investors, they're investing there for Ethereum. So that already fulfills the first criteria. And it can be any asset. It doesn't have to be cash. It just has to be some asset. The second criteria here we see on the intended use of revenue. So this table here shows what they plan to do depending on how much money they pool together from all these different investors. So the fact that they're pooling money from different investors and using it for some purpose means that they are linked in a common enterprise. So that is another criteria of the Howey test already met. And then if we go to the terms and conditions of sale document here, we can see another criteria being met, which is that the profits are linked to the effort of others. So if we look here, the group of developers and other personnel that is now or will be employed or contracted with Ethereum Switzerland, ETH is termed the Ethereum team. So basically what this document is saying is that they're going to use these funds to fund developers to create Ethereum, essentially. And if we just go back to the use of revenue here, we can see that the funds are being used to develop the Ethereum platform, community outreach, which I assume is some kind of marketing to other developers. So this clearly fulfills another criteria of the Howey test. Now we got 3 out of 4 criteria. The 4th criteria, which is the expectation of profits. Now this is where it doesn't get so clear. This could be argued by Ethereum that there was no expectation of profits, basically, but I will go through that here. So in this document here, the terms and conditions, it basically says that whoever signs this understands that they are not exchanging Bitcoin for Ethereum for the purpose of a speculative investment. So technically, whoever signed this, they knew that it's not an investment, technically. Also, when you get to the white paper itself, it describes Ethereum as basically like gas for the network. Like you need it to use the network. It's not an investment. It's almost like fuel for cars, almost. But when I think about it, when has anybody in the crypto space bought some crypto without the expectation of profits? I mean, I think pretty much everyone expects to make some profit from buying crypto, right? And when you think about it, back then, this ICO took place during July 2014. This was a couple months after coin had a massive run up in price. I think it went from like something like $12 up to all the way up to $1,000. So assuming these investors who owned Bitcoin are now in this Ethereum ICO, the fact that they're Bitcoin investors, they probably knew about the Bitcoin bull run, right? So, I'm pretty sure that they're aware that, if they invest in Ethereum early, they would probably make some profit, right? This is, I'm not saying Ethereum is a security or not a security. I'm just trying to explain to you some of the arguments that the SEC could bring up against Ethereum here. So this is probably one of them. Furthermore, the document here also goes through supply growth rates. It goes through different prices of BTC. And it may not explicitly say that it's an investment, but as an investor, I'm looking at this and seeing, the supply rate is going down over the years, which means my Ether is going to become more valuable as time goes on. So instinctively, as an investor, I would know, I would probably gain some profit from this, even though this document doesn't explicitly say that it's an investment. But then we go back here to this document. Again, it says it's people who bought Ethereum in this ICO know that it's not a speculative investment. So it's not very clear on this last point of the Howey test. But in my mind, I would consider it a securities offering in my mind. So for the first event, the Ethereum ICO, I would say, yes, that is a securities offering. Okay, so we looked at the Ethereum ICO. Let's move to the next key event on the Ethereum timeline, which the SEC could bring up, which is the DAO hack and hard fork of Ethereum. So this happened about 1 year after the ICO. And in my mind, just going through all this, it doesn't really show that Ethereum is a security. And I'll explain why. Now, the DAO was basically the first decentralized autonomous organization on Ethereum. This was a group which was separate to the Ethereum developers. And what they were trying to do was raise money or raise Ethereum to fund various projects to improve the economic robustness of Ethereum. Now, I know it is based on the Ethereum network, but it is a separate group to the Ethereum core developer team. It's two separate organizations, essentially. So the DAO token, whilst it is on Ethereum, as an investor in the DAO token, I wouldn't necessarily expect Ethereum core developers to get involved in the DAO project and improve the DAO project in some way, right? I wouldn't expect that. In my mind, when I invest in the DAO token, I'm investing in the DAO team, right? I'm not expecting Vitalik to come in and make everything better somehow, right? So to me, this doesn't really fulfill the criteria of reliance of profits on the Ethereum core developers. And this is when it really, I think it started to show decentralization. Like there's different groups that are using this commodity called Ethereum, basically. But something interesting to note, though, is the DAO token was actually considered a security because it met all the 4 points of the Howey test. So moving on, shortly after the DAO raised their funds, they were hacked. They were hacked for quite a large amount. I think it was like 50 million or something like that. And this caught the attention of the Ethereum core developers, which was Vitalik and about 7 other core developers, I think, something like that. And Ethereum communities brought this to their attention. And basically, they found a way to hack back the stolen funds and return it back to the DAO. So again, here in my mind, the DAO and the Ethereum core developers, they're essentially 2 different communities. Now, the fact that the Ethereum core developers helped out the DAO organization, to me, doesn't really prove that the DAO investors knew that they could rely on the Ethereum core developers, because the Ethereum core developers, they could have easily just ignored it, but the community, rallied and they took a vote to help them out. So I'll give you an example here. It's like, imagine if Chevron was attacked by sea pirates and the pirates stole their oil, and then ExxonMobil decided to come in and help Chevron out and return the oil back to Chevron. As an investor of Chevron, I wouldn't expect ExxonMobil to come in and help me out. I wouldn't expect that. So, I'm just trying to illustrate the point here that investors in the DAO token wouldn't expect the Ethereum core developers to come in. They just kind of just did it out of their own, they just did it voluntarily. So again, here, to me, it doesn't really fulfill the reliance of profits criteria of the Howey test. Now, after the funds were returned, they're having some issues with it, and the core developers decided to do a hard fork of Ethereum. Now, the proposal to do this came from the developers, but the overall decision was decided by a community vote. And you can see here, 90% of the Ethereum holders vote for a hard fork. So again, here, to me, even though the proposal was put forward by the developers, it was eventually came down to a community vote. So to me, in that way, people have their own agency to decide on whether or not to do this, right? So to me, it doesn't show reliance of profits. Everyone has their own say in what happens. And to add to that agency point here, we can see that this actually caused Ethereum to split up, and that is actually how Ethereum and Ethereum Classic was created. So Ethereum were the people who voted for it, Ethereum Classic were the people who didn't vote for it, and they believe in code is law and stuff, and you shouldn't change anything and everything should be immutable. So those people, they had their own agency to go off and do their own thing, so they're not relying on any one single group or organization. Anyone can just do anything they want, essentially. So we've gone through the second event here. In my mind, it doesn't really show that Ethereum is a security. So with that, let's move on to the next point here, which is the Ethereum 2.0 upgrade, where they upgraded the consensus algorithm from proof of work to proof of stake. Now, pretty much since the ICO, the development and the upgrades and the progress of Ethereum has mainly been community driven. So it's all done on public online forums and on GitHub and stuff like that. Essentially, anyone can come in, contribute voluntarily, and decide on the direction of Ethereum. Anyone can do anything they want, basically. So, even you as an Ethereum investor, if you wanted to, you could go in and change and direct the project as you see fit, right? You're not technically, you don't have to rely on Ethereum developers. So how this process happens is through Ethereum improvement proposals. Literally anyone can go on, propose something, create a draft. It gets reviewed by Ethereum editors, which I will explain about in a bit. And it goes through this whole process. And if it's all checks out, then it would be put forward into a final stage where basically anyone in the Ethereum space can choose to adopt that upgrade if they wanted to. So the proposals, they're checked by Ethereum editors. anyone can apply to be an Ethereum editor. You just have to meet this certain criteria here. It says, just strong belief in the mission, blah, blah, blah. So literally anyone can come in and become an editor. Now, the job of the editor is to simply check the proposal for, if does it actually make sense, like in terms of the factual soundness of it. Would someone read this and understand like what is being conveyed here? And they're also supposed to facilitate transparent discussion about any proposal. So when a proposal is made, they're supposed to bring it forward to the community and try and facilitate discussion about it to see whether it actually makes sense or not. So their job is not to decide what is correct and what should be put forward. Is they're simply just to facilitate communication around the appropriateness of these proposals. Now, there will be discussions that take place. There would be changes to the code. And once it goes through all this process, it is eventually merged with the Ethereum sort of core code base. And when it gets to that point, people who run the Ethereum client, node operators, developers, they don't have to upgrade to that new version. They can decide not to and run the old version. So everyone, what I'm trying to explain here is everyone is basically free to do whatever they want. Everyone has their own agency to come in, influence the direction of Ethereum. They don't have to rely on other people's work. They have the choice to not rely. So to me, Ethereum doesn't really behave as a security in this way because the progress, the upgrades, the development, the direction is all decentralized. Everyone can just come in and just do whatever they want, essentially, right? Now, if you ask me, how decentralized is it really? And how decentralized does it need to be for the SEC to look at it and say, yeah, maybe this is not really a security? That's a separate discussion. I don't really know at this point. But we know that Ethereum has become and is becoming more and more decentralized as time goes on. So we see here on this graph here, this is the amount of developers on the GitHub. And you can see there's more and more developers that are joining. Now we get to the Ethereum upgrade to proof of stake here. Of course, this whole thing followed the exact same process as I've just shown you. It's all decentralized. For the points I've just mentioned, to me, Ethereum didn't really behave in a security this way. Anyone could come in and just influence this project. Someone could have come in and said, hell no, I don't want this, and convinced a bunch of other developers and got some majority on this and decided we're all like, nah, we're not going to upgrade to Ethereum proof of stake. So that could have happened as well. But because it actually made sense to do this, that's why everyone agreed to do it, right? Now, furthermore, if you wanted to stake Ethereum, you can just go and stake it yourself. You don't have to rely on someone to stake it for you. So again, that just shows you don't have to rely on someone. You can just go and do it yourself. But there is a specific case regarding staking, which I think is actually a securities offering. And I'll go through that now. Now, one situation where the SEC could say Ethereum is a security is in the form of delegated staking. So delegated staking is when you don't want to stake yourself, you don't have all the equipment or whatever you need to do it. You can give your Ethereum to a person which has all that stuff to stake it for you. So this meets all the 4 criteria of the Howey test. You are exchanging Ethereum, which is already an investment of money, for some staking service. You are relying on their efforts to generate your profits, which is all the staking yields. You are pooling money into an Ethereum pool where all the other customers or investors come in and give their Ethereum to that staker and pool their money to generate the staking yields. And yeah, you are relying on that staker's efforts to generate your profits. If they didn't do their job properly, if they had like 50% uptime or just bad uptime, then you would get a lower yield. So you are relying on that person's work. So I can definitely see the SEC looking at this and saying maybe all these validators, they need to sign up with the SEC as offering securities, essentially. So guys, I just want to wrap it all up for you. So if we go through each of them here, during the Ethereum ICO, Ethereum could be considered an unregistered securities offering at this point in time. Although all investors signed an agreement understanding that this is not an investment, this is definitely something that could be argued over by the SEC. And then the second point is, during the DAO hack and hard fork, Ethereum did not behave like a central promoter or a third party. It didn't really act like a security. The Ethereum community could have ignored this event if they wanted to. They all took a vote to take action, and in the end, the community actually split up, which shows that this is not the behavior of an organization that is centrally controlled. Everyone has their own agency to do whatever the hell they want. And then the third thing is, during the Ethereum staking upgrade, proposals and upgrades are adopted individually. Anyone has their own agency to adopt the upgrade and to, they can go off and generate their own profits if they wanted to. They're not relying on the Ethereum core developers. So in this way, it doesn't really behave like a security, but an argument could be made over the delegated staking of Ethereum. This could be seen as an unregistered securities offering. In my opinion, Ethereum itself is not a security. It really depends on the situation and the context of how Ethereum is offered. So if it's in a specific situation like delegated staking, in my mind, that offering is a security. So under that offering, the terms of that offering, that needs to be registered with the SEC. But Ethereum itself, in my mind, is not a security. So it really depends on the context and how it was offered. So something can be a security and not be a security at the same time, depending on how it was offered, basically. So I just want to add as well, the Howey test was created in a time when blockchain didn't exist. So the interpretation of the Howey test today on blockchain is very nuanced, is very multifaceted. It was almost very subjective as well. So how decentralized does it actually need to be for it to be considered decentralized is an example. And my point is, this is my own interpretation of the Howey test on Ethereum. You could have a different interpretation. SEC could have a different interpretation. But, you let me know. Let me know if you think Ethereum is a security or not a security. Just drop it in the comments below. So that's it for this video, guys. Thanks very much. Hope that was informative for you. Yeah, if you have any other comments or any video ideas or just suggestions for this channel, just drop it in the comments below. I'm looking to improve this channel. I'm just doing this out of my own free time, basically. I pretty much work like 4 hours a day, most days on it. But I do it because I like it. So yeah, just let me know what you think. And I'll see you next time.